Hello, and welcome to myfinanceteacher.org. Let's have a look at the range of markets. So let's have this market update for the beginning of this week. And today is Monday, 26th of July. Let's have a look at cryptocurrencies, precious metals, and the general stock markets. The cryptocurrencies, particularly Bitcoin, finished its usual 2-month cycle over here on the 20th of July. In my previous video on Bitcoin, I actually said that I was expecting Bitcoin to continue down to create this extremely pessimistic sentiment on the crypto market to create this cycle low. After that, I was expecting some sort of a bounce to give us at least a poke above the 50-day moving average. And although price has given us that poke above the 50-day moving average, it looks like I was wrong on the timing. Bitcoin didn't actually continue down for another few days. Instead, it bounced right back up to $39,000, nearly $40,000 today after cooling down to around $38,000 at the moment. So I see a new cycle on Bitcoin right now, which so far has been going on for only about 6 days. As the cycle is still very young, I think there is still some potential in the ongoing Bitcoin cycle. Although the question is still open on the size of these potential gains. That's because relatively strong resistance is not that far above the current price and not that far above today's peak so far. The resistance is based on this recent high in mid-June, as well as another high in early January. That's the lower range of the ongoing resistance level, somewhere at about $41,300. And the higher range of this resistance zone is close to this 200-day moving average, as well as the late February and late April highs. So that would be somewhere around $46,000. So the resistance is anywhere between $41,000 to $46,000. And I think Bitcoin does have a chance to dip into that resistance and retest the 200-day moving average perhaps over the next few days, as again, the ongoing 2-month cycle is Bitcoin is only under 1 week old. So perhaps a continued upward momentum in Bitcoin for another few days to come close to that 200-day moving average. After that, I do expect a sizable cool down, as that is, I think, is going to be a strong resistance zone. There is perhaps a lot of traders who have entered into the markets prematurely, and they have been kind of depressed with this relatively long stretch of being underwater. So perhaps once Bitcoin retests this 200-day moving average, there will be a lot of traders who will want to get out of their positions. So a bit of a cool down by then. And at the same time, if you notice, by then the 14-day RSI on Bitcoin will be ready to dip into this overbought area, also pointing to a potential cool down. And the next million-dollar question after that would be whether the continuation of the cycle will be more of a sideways move or a strong recovery in Bitcoin towards $50,000 and higher. So while personally, as well as with the members at myfinanceteacher.org, I didn't manage to catch this cycle low to increase my crypto allocation. As I said, I was expecting Bitcoin to continue further down for another few days. I still do have a relatively sizable allocation to cryptos, as I mentioned in the previous video. Currently, it's around 17% if memory serves well. So once Bitcoin retests this 200-day moving average, I am planning to reduce that allocation to a minor degree. After all, by then, Bitcoin will also be likely to have poked a few times above the Bollinger Bands, and the width of the Bollinger Bands perhaps by then will be expanding, giving some sort of a meaning to these pokes above the bands. And after a retest and a cool down, I do still plan to get back into, again, sizable allocations into cryptos. So that's my trading game plan for perhaps another couple of weeks. Although besides my trading play money, I do have a separate hodl position that I haven't touched for quite a while. Next, let's have a look at the Optimism Index in Bitcoin, and we see that the optimism is recovering, but it's still quite far below 70 levels. So that is where the previous cycle low in Bitcoin took place. So as I mentioned, there is a potential for another few days or a couple of weeks higher in Bitcoin before it retests the 200-day moving average and comes closer to the markets getting a little bit too optimistic on the cryptos. But again, all of this is a relatively shorter term discussion. In the longer term, with all of those trillions of dollars being printed, I think cryptos as well as other hard assets are going to do pretty well. Talking about those hard assets, let's have a look at gold. As I mentioned, gold is likely to come down into the intermediate cycle low, perhaps over the next few weeks. The ongoing intermediate cycle is now around 5 months old. Usually these cycles last for around half a year. So perhaps the ongoing short-term daily cycle is going to get ready to give us that intermediate and daily cycle low over the next few weeks. As I also mentioned in one of the previous videos, it's still likely that gold again retests this 50-day moving average, perhaps somewhere around the 1840, before coming down into the ongoing short-term as well as the intermediate cycle low over the next few weeks. After all, the ongoing cycle is only 27 days old. Usually these cycles last for around a couple of months. So again, there is still time within this cycle for gold to trend a little bit higher, to retest that resistance again before coming down into the cycle low. And as I also might have mentioned in some of the previous videos, although I do expect some weakness on gold, I have already managed to get into pretty much full positions at a quarter of my total portfolio. So while in the short term gold might be relatively soft, again, in the longer term, getting in anywhere around the current prices is, I think, going to turn out to be a good decision in the long run. Let's have a look at the gold Optimism Index, and it has recovered since the previous cycle low a few weeks ago. And again, while I think in the long run entering anywhere around here is going to be a good decision, in the shorter term, I think there will be a nicer entry opportunity once this Optimism Index comes back to around 50 or so over the next few weeks. Next, let's move on to the general stock market, looking at the S&P 500, which has started a new cycle just last week. So while short-term daily cycle is still very young, meaning that there is still time for the cycle to continue higher before dropping into the cycle low, looking at the intermediate cycle, we see that the intermediate cycle is already 144 days old. And usually these cycles last for around half a year. So this cycle is getting pretty old, and there is a chance that the stock market is going to come down into a significant correction, perhaps over the next few weeks, into the intermediate cycle low. So perhaps the ongoing short-term daily cycle will not rise for as long as some of the previous daily cycles did. But still, perhaps this week there will still be some green candles to give us a couple of pokes above the Bollinger Bands, which usually indicate that a turnaround in momentum is quite likely. And this week we have the FOMC meeting, where the statement might not really be very dovish, given that the stock market is at all-time highs. And in turn, an insufficiently dovish statement from the FOMC might actually bring this correction in the stock market. So with the members at myfinancesteacher.org, we played a little bit of this bounce from the 50-day moving average, but back on Friday, I reduced my allocation to the general stock market to a very tiny 2 or 3% out of the maximum quarter that I allocate to the general stock markets. And I think I'm going to hold through any kind of correction with this tiny allocation, expecting to add back to above 20% allocation somewhere close to the intermediate cycle low, perhaps over the next few weeks. Looking at the 14-day RSI, we see that a couple of weeks ago, the RSI has already poked into oversold territory a couple of times. And if S&P 500 doesn't show a particular strength over the next couple of days, there is a good chance for negative divergence to form on the RSI. That's if the general stock market only manages to move modestly higher, giving us a higher high on the price chart and a lower high on the RSI. It usually indicates that, again, some sort of a turnaround in the momentum is likely, as in, say, over here in April this year, slightly higher highs on the chart, lower highs on RSI, were indicating a drop into the short-term daily cycle low. This time, though, perhaps the correction is going to be stronger as we are likely to drop into the intermediate cycle low. And looking at the futures before the US markets opened today on Monday, we see that the futures are already around 0.5% down. So being cautious over here on the stock markets is probably a good idea. And lastly, let's have a look at the Optimism Index in the general stock markets, which, to be honest with you, is a little bit confusing right here. Usually, optimism increases into the intermediate cycle tops and drops down with correction, creating this proverbial blood on the street, giving you a buying opportunity as a smart trader. But over the last several weeks, over the last couple of months, Optimism Index has been behaving strangely with the general stock market just chugging along to higher and higher levels. We see optimism declining. This is more of a smart money behavior rather than the behavior of crowd's optimism about the markets. Usually when this optimism index is close to this green line, that's a buying opportunity. Whereas at the moment, the stock market is at new all-time highs, while the optimism is only around the level of 50. So it's a little bit confusing at the moment. Let me know what you think about the optimism index in the comments below. While you are there, please remember to hit that like button, subscribe to the channel, and share this video with your friends. For now, I wish you a productive Monday and good luck in your trades.